has happened to taxes over time. The share of national income raised in tax has been slowly edging up in recent decades, and it's due to increase even further in future years, in fact to the highest level in 30 years. And if we look even further forward, an ageing population and growing cost of healthcare means there will be pressure to raise even more in tax. So it really matters where the government is getting this money from. There have been some major changes in the way that taxes have been raised over the last 30 years. First, while the amount raised from income tax has been quite stable, we are now more reliant on the richest income taxpayers. In recent years, increases in the tax-free allowance, that's the amount that you can earn before your income is subject to tax, have meant that fewer low earners are paying tax. At the same time, a larger overall chunk of income tax is paid by the top 1%. In fact, that's at the largest level since the 1970s. Income tax is one of the main ways that we redistribute from the rich to the poor. Now, of course, it's a political choice about how much of that redistribution we want to do. But the fact that we're now more reliant on a small chunk of the population to pay all this income tax means that we're also more reliant on the fortunes of this high-earning group. While the share of revenues coming from income tax have been relatively stable, the shares coming from national insurance contributions have actually increased over time. We often actually tend to see chancellors do this. They cut obvious taxes that people recognise, like income tax, and they increase the ones that few people pay attention to, like national insurance contributions. And the same is true with taxes on consumption. Well-known taxes on fuel and alcohol have become less important sources of revenue. But at the same time, more obscure taxes like insurance premium tax are becoming more important. Most recently, there's been a big cut in corporate tax. The main rate has already come down from 28% to 20% and will fall to 17% by 2020. The hope is that lower taxes can encourage more business, higher wages, lower prices. But this policy change costs the government a lot. It's chosen to make up some of that shortfall with a host of new, smaller taxes, such as those on sugar. If the government wants to raise more revenues in future, it's going to have to look beyond those small taxes and back towards the big taxes on income and consumption. This will mean that they'll need to be more upfront with the public about their tax changes.